In this video, I'm going to show you how to trade supply and demand zone. Well, hello, welcome back to Trade. Let's get down to the video. There are chapters in this video: supply and demand structure, how to draw supply and demand zones, in-depth market structure, supply and demand entry strategy, how to make take profit levels, time frames explained, and lastly, 10 examples on a real market chart. Let's begin the journey by explaining how supply and demand structures looks like. We have 4 supply and demand structures, which is drop base drop, rally base rally, drop base rally, and then rally base drop. In this structure, we can see that we have, in the first picture, we can see that we have our drop base drop, which is when the market drops, make a manipulation and drops, and then come back to the supply zone and drops again. In the second structure, we can see that we have a rally base rally, which market rallies up, consolidate, rally, demand zone, and rally again. These are also considered as continuation patterns. So if we identify these structures, just know that we are in a continuation market. Here we can see some of the reversal patterns, which is drop base rally, which eventually drops, consolidate, make a base, then rallies up from the first image below, and then make a demand zone, then rallies to new highs. And then on the second one, we can see that the market rallies up, consolidate, make a manipulation, drops, come to that supply zone, and then drops. This is reversal patterns. There are 2 different ways to draw supply and demand zones. The first one is drawing from the wick, and then the second one is drawing from the body. I call it the body type. So let me show you an example. From this example, we can see that from the wick, we draw using an engulfing candle, drawing the zone from the highs and the lows of the bullish candle. And then the body type, we just reduce the risk by reducing the zone to the body. As you can see, we have our invalidation level, which will be where we don't want to see the market breaking through when the market try to test our supply zone. From the demand zone is the same thing as the supply zone. For the week, we draw the demand zone from the highs and the lows of the bearish candle. This is the weak type. But if we want to reduce the zone, we just lower our zone. Drawing the demand zone will be from the open to the low of the bearish candle. This is an example on how to draw a real demand and supply zones. So let me go to the real chart so that I can show you how you can identify this easily. And lastly, if we have a failed supply or demand zone, if price fails to reverse on the supply and demand zone, price might potentially come and test it again. As you can see from the first example, we have our failed supply zone. The market might potentially come and test that zone and eventually push higher. And on the same example as the failed demand zone is the same example. Price break through that zone without any confirmation and then retest it and then drops lower. Let's move on to a real chart now so that I can show you an example on a real market chart. On this section of the video, I will be showing you how to draw supply and demand zones perfectly. So to draw supply and demand zone, all you have to find is an engulfing candle on the market so that you can identify it easily. After you have seen that we have an engulfing candle, as you can see from over here, we have an engulfing candle. So after that, we have noticed that we have our engulfing candle over here. Our zone will be like this. From the previous candle, we put our line over here, and then our invalidation level will be above, because here, as we can see, this is our supply zone. From here, this is where you draw your demand zone. And then you will notice that when the market comes to that zone, it reacted immediately, and then the market pushed to the bearish side. As you can see, from here, we can reduce the risk by using the supply zone through the body of the previous candle. That's how you draw supply and demand zone. The invalidation level stays the same because here we are on the supply zone, so the invalidation level will stay like this. So let me show you another example. Even for instance, we have this engulfing candle over here. As you can see, we have our engulfing candle over here. This is a valid supply zone over here. I will find another one. Another one is here. As you can see, this one is a little bit bigger. We can reduce the zone like this. Here is our demand zone below from the body. The moment you see an engulfing candle, that's why you can identify that we have a supply or demand zone. Even here, we can see that we have our engulfing candle while the market is moving to the bullish side. To draw your zone, you can start from the wick. As you can see, this is a valid demand zone over here. But sometimes it's very risky to use the wick because you might get in very early while waiting for the market to push to the upside. So for that, we can reduce our risk by using the zone to the body. That's how I like to use it most of the time. Because doing this will reduce your risk, but you'll have less trade in the market. So let's find another one. As we can see from here at the top, the market showed a sign that this trend is bearish. But to draw this supply zone over here, we draw it like this. From the wick to the high. When I mean the high, I mean the bearish candles, the bullish candles high here. But to reduce our risk, we just do like this. From this body open over here, the bullish candle is open. So as you can see, the market eventually dropped from that zone. There's a lot of them here. Even this one here, we can see that we have our demand zone, which was invalidated immediately. I'll show you when we reach the part where I show you how to enter so that we can avoid this kind of things. As you can see, we have our supply zone over here, and then the market just played around this zone and then eventually dropped lower. Even this one over here is our valid demand zone, which was invalidated. But this one over here, we can see that we have our bearish candle over here. Immediately we can see that we have our supply zone over here, but it was invalidated immediately. So we remove this and then we do something like this. So as you can see, the market went up, pulled back to the zone again, pushed higher to that zone again at the top, and the market dropped lower. Throughout the video, I will show you how to find them easily. There's a lot of them. Here is that one zone that you see. We can see here that we have our demand zone over here, of which the market just went through it immediately. Like I said, this one is a failed zone that need to be used again. So as you can see, if we extend this, we can see that the market reacted from this zone and eventually the market pushed lower. From this, we can see that the market like to respect these zones that I'm showing you right now. So we have to use them carefully. Even from this one here, every time when you see that the market is coming to the zone but immediately doesn't react from it like this, let me show you an example because this one is very important. Let's say this is your zone over here. The market is pushing like this, But immediately when you don't see a new high over here, just know that the market might potentially reverse to the lower side and then push lower. From this one, we can see that is the same thing that I was telling you right now. This is our zone. And when you draw a zone that is looking like this here, let me remove this and show you. As you draw your zone, you can see that our bullish candle is the lowest one here. Your zone is going to be like this. You put the lowest one possible, because this is where the market rejected from here. This is where the manipulation happened. So we can see that the market from here went up from here, dropped to this zone, and we can see that we don't have our new high. So the market pushed lower, respected this zone, and then we can see that the market went lower from here after respecting this zone over here. Same thing that happened over here. As you can see, we have our zone over here. It's the same example that I showed you before. This one is just a failed zone that was never been used. So you just have to understand how to draw your supply and demand zone. Here is our zone again. This is your zone. Another zone here. You can see like there's a lot of them. Another one here, which was invalidated, and another one here. As you can see, we have one over here, and then we have one over here. Sometimes when you enter the market, if you use the first one, the second one might be valid. As you can see, this one failed, so don't give up when you see something like this. Just try the next one, which was this. So in this case, we can see that the market respected this one here. And then we have our failed zone over here. Let me remove this part so that I can show you. We can see that we have our engulfing candle here, this bearish candle over here. This is a failed zone. As you can see, the market came and then it didn't respect this zone over here, pushed through, and then came and retested that zone and then pushed higher. I hope my chart is not messy. So as you can see, this is your zone over here, which dropped the market a little bit. As you can see, we have our zone here again. As you can see, we can see that the market pushed through this one, dropped a little bit, and then didn't respect this one, and then pushed higher to this one, and then the market pushed lower. So this supply and demand will help you to enter the market very easily with confirmation. This one is just a full strategy so that you can start trading today. So I hope this examples over here was very helpful. So we'll move on to the next chapter. In this next chapter of the video, I'm going in depth on how the market changes direction. This will be helpful if you want to identify the direction of a trend or a reversal. Let's begin. In this section of the video, I'm going to show you how the market changes direction and how to predict the market efficiently. So this one is going to be an easy part of the video, so that I think you have seen this thing online, this pattern over here online, or maybe on Google, because this is how the market moves. The market moves in waves. So in this, we can see that in this part over here, we can see that the market is bearish, but for it to push higher on every reversal of the market, you will see this kind of structure. If it's not clear, even if you move to lower time frame, you will see it. So for the market to push higher, the market must first break in the bearish market the market must break the last lower high, which is this one. If the market doesn't break this last lower high over here, the market will never push higher. So same thing that is happening over here. We can see that the market is pushing higher, making higher highs and higher lows. But eventually, when you see that the market is breaking your last higher low, just know that the market is potentially reversing. And the retracement from this here, it can be even higher, like this. But the moment you see that this one has been broken, just know anytime that the market might push lower. So that is how you predict the next market wave. So eventually, most of the time, you will see that this moves here. This moves here, that is pushing higher. This one here, you will see that is very aggressive. Even this one here, from the higher high to the first lower low, you will see that the market is very aggressive. So that is how you predict the next move. So let me show you on a chart so that you can identify it, because these things alone doesn't prove anything. You can see that we have our bearish over here, then the market pushed higher. You will see that pattern. Then the market pushed lower. We have our first high here. Then the market pushed higher, pushed lower to a new low. So this is a confirmation that we have our new high over here, our new lower high over here, because we have our new lower low. As you can see, right now we just have to wait for the market to break this high here, which indeed was broken by this wick over here. So that means our trend has changed from here. So meaning when the market retraces back from here, we can look to buy from this area here. So that's why you see the market pushing higher, just like that. It doesn't work on EURUSD only. It works on all pairs, including cryptocurrencies. And sometimes it might not be clear. As you can see from this 4-hour time frame, we can see that from here we are pushing higher, lower, higher, lower, higher. You see, it's not clear. Lower, breaking your high, breaking this high over here. So eventually you can see that the market is starting to make that pattern. So for it to reverse while going up, you just have to wait for another break. As you can see, this one here are very small, but eventually you can see that we have our change in market direction here, because this low is broken and then we push lower. And some of you who are in my Telegram group know this. I have shared this sell area over here, and which eventually push lower. Here we can see that we have our Bitcoin chart over here. The market is pushing higher, 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 higher. And then from here we can see that the market just rejected, pushed lower, retraced back, and then move lower. As you can see, some might say this is support and resistance, but it's not. It's just a change in market direction, because sometimes they can be a little bit small and it won't be easy for you to identify them. If it's not easy for you to identify them, move to lower time frame, then you will see them clearly. Like for instance, we are pushing lower like this. This little wick here in lower time frame made a high here and then a new low, but then you can see that we don't have our pullback before the new previous high, but the market pushed higher, retraced back, pushed higher inside this, and still pushing higher. You can see still pushing higher until we can see that the market eventually moved to the upside. You just have to know. As I have told you before, we can see that because we are pushing higher, these sections here, they are very strong. Like here, we can see that they are very strong. This one is having a lot of candlesticks to the bearish side, so the momentum is very low to the side. I hope this was clear, so I'm going to move on to the next chapter. In this chapter of the video, I'm going to show you supply and demand entry strategies in candlesticks. There are 4 types of entry candle strategies. Here's one. On the first one, we can see that we have our candle close, which our entry will be when the market closes bearish on the supply zone, and that candle will be our confirmation entry. And on the retracement entry is the same as the candle close, but our entry will be above the bearish candle close. In this case, it will reduce our risk, but we will have less trades to enter into the market. And remember, this candle entry is only based if it's not an engulfing candle. All of the rest candles that confirms in the area, if it's not an engulfing candle, then that is considered our confirmation candle. And now let's see how the engulfing entry looks like. Our confirmation entry will be when the market closes with an engulfing candle on supply or demand zone. The candle, when the engulfing candle closes, that's our confirmation to enter the market. Our retracement entry will be on the previous candle's open to reduce our risk, because this is an engulfing candle. So please take notes on this one so that we can continue. So now that we know how to identify an entry candle, let's move on to a real chart so that I can show you how you can identify them in the real market chart. To confirm your entry, you just have to know the market direction and then how to draw your supply and demand, and then that's it. That's all you need, and the rules to enter using those entry strategies, because we have 2 candles formation to enter. So from here we can see that we have our change in market direction from here. As you can see, we have something like this breaking through, then came back and went higher, and then we draw our zone from here to here. And then we can reduce our risk by lowering this to the body, because you can see that this is an engulfing candle over here, and then we just wait for the market to come through this zone or maybe touch the zone, and then we enter from the close. Because this is not an engulfing candle, we enter at the close. Even on the engulfing candle, we enter at the close. But because we have our confirmation candle, we can put our buy order even here, because sometimes the market like to retrace back and touch this area over here and then pushes higher. I will show you another example over here. As you can see, the market is pushing higher, lower, higher, breaking this low over here with this wick over here. So we can identify our zone like this, because we can see that this is an engulfing candle over here. We can draw our zone like this. Then we wait for the market to come back to that zone, and then from this zone over here we can see that our confirmation candle will be the bearish candle here, which is an engulfing candle. So if it's an engulfing candle, we enter at the close or on the previous candle's open. As you can see, the open of this bullish candle over here is here. That's where you can put your sell limit order here and then reduce your risk. So that's how you enter using this. Let me make another example so that it can be more, so that we can understand. I'll make a couple of more examples to show you how to enter using this supply and demand. So we have our zone over here, and then we wait for the market to push to that zone. As you can see from here, we have our change in market direction, because right now we are bearish from this area over here. As you can see, lower lows, lower highs, and then we wait for the market to give us a confirmation to the bearish side, which is waiting for a bearish candle close from here, so that after this bearish candle we enter from the close. Because this is not an engulfing candle, we can put our sell limit order above the bearish candle. So that means we can enter twice from this trade and then put our stop loss above, so that we can enter the sell. So let's say, for instance, you are trying to enter because you see something like this. Because I know some people will do it. You do something like this, you wait for the market to come and do like something like that, because we have our zone over here. If you put your buy order just because you know that the market might potentially reverse, good luck with that, because we can see that the market just went through. That's why we need a confirmation candle to enter the market, to avoid this such trades entering without any confirmation. As you can see from here, we have another one over here, followed by a bullish confirmation candle. Enter the close, stop loss below, and then you put your buy order here, because this one is not an engulfing candle. And then if you see that your market made a new high without triggering the previous trade, just remove your order. So the same thing that is happening over here. As you can see from here, we can see that we have our zone over here. I hope you know how to draw those zones right now, because you know you can draw from the body to the wick. But as you can see, the wick, the body didn't touch, the candles didn't touch the zone, so the wick is the valid one this time. So you can use both and draw the inside one, something like this. So our confirmation candle is this one. Where is our entry? At the close of this candle, and then we put our buy order below. So that's how you enter using supply and demand. So in this case, your first entry is triggered immediately, and then the second one is triggered when the market retraces, and then your stop loss is below the zone. And then let me show you an invalid zone, this one over here. Why? Because we can see that our zone has been invalidated through this candles wick, so avoid such. Another example, can see we have our zone over here, followed by a bullish candle close. Because right now I'm showing you how to enter, I won't show you how to include the market structure in this area over here, because I will show you in the next chapter of the video, which is the last one. So stay tuned to the video so that I can show you more examples. So from here we can see that we have our bullish candle, we enter from here, followed by our buy order here. You can trade like this and avoid this part over here, just to reduce your risk, and avoid entering here and just enter below if this is not really engulfing candle. So you can trade like this, but just know that you will have less trades that will trigger. Another example is this one over here, and I will still show you how to easily find this kind of trades here, because I'm skipping a lot of things just to show you how to enter, but it's very easy to find them. As you can see, we have our zone over here. You can see that there's no spike above this zone over here, So our entry below when the market closes with this bearish candle, and then we can put our buy order over here, our sell limit order over here. I don't know why the market likes to do something like this, but nobody told me. I just found it while I was backtesting. The difference between an engulfing candle and a normal candle close. They like to do something like this. I don't know why. As you can see, the market pushed lower after this. So that is why I told you that you can still enter like this, only using the retracement only. As you can see, another one over here, you can see that the market pushed inside this zone, touched this zone, but started to retrace. But eventually the market pushed higher. Even if you entered this candle here, the market still pushed higher. So for engulfing candle is the same thing, but a little bit different. Let's say, for instance, you missed this one, but then the market made an engulfing candle. So that means you enter here at the close, and then you put your sell limit order and the previous candles open. Previous candles open on the engulfing. So just know that. But if it's something like this one here, because we can see that this is not an engulfing candle, we can put our buy order over here below, or when the market closes. So that's how you do it. I hope you took a lot of notes throughout the video. Another example is like this. Market pushed lower to this area, made a bullish candle close, stop loss below. Where's your entry? At the close of this bullish candle or at the retracement below. That's how you enter using supply and demand. So let's move on to another chapter of the video, which is how to take profit. I can't give you a full trading strategy on supply and demand without giving you a simple strategy on how to take profit. Here in this section, I'm going to show you 4 things on how to take profit. You can take profit using support and resistance level, previous highs and lows, using risk to reward, and then a gap fill of an imbalance. For the gaps or an imbalance is where the market, you see that it didn't fill the price action area. Like there will be a huge momentum in the market, something like this over here. The space between here is the gap that need to be filled in future. So let's say you want to enter at this area over here, using this area over here. Because you know how to enter the market, we know how to identify the market structure, we can easily do something like this. We know that we have our new high over here, the small one. Wait for the market to come to this area over here, and then we enter the confirmation. Then we target the previous imbalance. So meaning our trade setup will be something like this. Our stop loss below, and then that is 1 to 5 risk to reward. Never use 1 to 1 because you'll eventually blow your account. As you can see, this is very easy to identify an imbalance in the market. But we can eventually use the previous highs and lows. From here, if the market is very bullish, we can use this area over here and target a huge money in the market. I mean, we can use our support and resistance. As you can see, it's still 1:4. Always when you're using supply and demand strategy, target 1:4 and above. Don't go below your expectations. Aim higher because it moves and then your entry is very low with risk. So try to aim higher so that you can grow your account very easily. Like from here, we can see that we have our zone over here. Our confirmation candle is this one, which is an engulfing candle. You can see this one is an engulfing candle. So our entry can be from the close or here at the previous candle's open. So let's target. Put our stop loss. Let's aim for 1:4 first. You can see we have our 1:4. Let's find our gaps in the market. We can see that we have a little gap over here, which is the same as the 1:4. Or we can target our support and resistance, which is this area here. As you can see, now I'm reducing it. So you'll decide, but always aim for 1:4 and above. So this is how you take profit using supply and demand. A little bit of more practice will be very helpful. But if you don't know how to trade using support and resistance, I have made a 20 minutes video. You can watch it. In this section of the video, I'm going to explain time frames. The higher time frame of the monthly is daily, the weekly is 4 hours, the daily is 1 hour, the 12 hours is 30 minutes, and you can get this 12 hours time frame on the IC Markets MT5. This video is not sponsored by IC Markets. So in MT5 you can also get 6 hours, 4 hours 15 minutes, 1 hour 5 minutes, or 1 minute. In summary, you can take notes from this section of the video. Let's begin. This is the last section of the video, how to make a trading plan. On the higher time frame, we identify the zone, followed by higher time frame confirmation, and then followed by a lower time frame zone, and then lastly we enter using the lower time frame with proper risk management. Let's begin the last part of the video. Now from this example over here, now that we have a lot of things that we have studied throughout the video, now let's move on to the more intensive stuffs. Okay. So we can see that here we have our failed zone over here. As you can see, then we wait for the market to come throughout this zone over here. This one here is our confirmation candle. Because we are on the daily time frame, our lower time frame will be used as an entry time frame. I hope you understand this. Higher time frame we confirm, in lower time frame we enter using the same things. So because we have our entry here, meaning we can enter from the daily time frame, but we can reduce our risk by going to the lower time frame to enter using lower time frame. So from here we can see that we have that daily area zone here, and then we will find our zone here. So which one is our zone? This zone over here. So we will enter through this area here. Because this is not an engulfing candle, we can enter above here, putting our stop loss here, and then that means we can target more profits. As you can see, the market eventually pushed lower, and you can eventually use the 1:4 in the higher time frames so that you can have a little bit of more profit. As you can see, I have reduced the risk to 1:14. We can see that we have our zone over here, we have our confirmation, but to enter from here, we can still reduce the risk. Because we are on the 4 hours right now, let's move on to lower time frame, which is the 15 minutes. As we can see, we were looking to buy from here, from this area over here, but we can confirm our trade using this engulfing candle over here, reducing the risk from below to here. That's how you do it. Or you can find another zone that was invalidated before from this side to enter throughout the area over here. So you see, your risk now is reduced, but your target now is very big. Let's move on to another example. For another example, right now we are on the weekly time frame. Your zone is like this. You wait for the market to come to this area over here, making a bearish engulfing candle. Your entry will be here, and then your stop loss above. Your retracement entry here. So your stop loss is above the zone. So, but we want to reduce the risk because we are on the weekly right now. We can enter throughout the 4 hours. So in this area over here, we will find the market structure. So in this case, we were looking to enter from here and here. So meaning we have to find an entry strategy over here. There's a lot of them over here. We can see that the market eventually made a zone this side, breaking this low over here, which is our change in market direction. Breaking this low over here, which is our change in market direction. As you can see right now, our stop loss is going to be huge, so we are reducing our risk. As you can see, now we have a huge target, very huge target. As you can see, the market eventually pushed lower. So this is how you trade lower time frame, higher time frames, entering in this bigger. As you can see, our stop loss is going to be huge. And now our target is like this. If you were using 1:4 in the higher time frame, then this is it. This is how you do it, guys. Change in market structure in lower time frame. Find your zone, find your entry, enter the market. Because you already know that the market has already confirmed in the weekly time frame to trade lower. So this is how you do it. Let's move on. Let's see how it is possible to find the zones easily. You might ask yourself a question that, does supply and demand work on cryptocurrencies? Yes, it does. As you can see, we have our zone which is forming here at this current price action during the time of recording this video. I can't say I'm predicting the market because right now we can see that we are on the higher highs of the market right now. But if we see a bullish candle over here that close without going through this area, we can see Bitcoin going higher. But if the market breaks through this, we can see the market coming back, retracing back to this area over here, pushing low again. This is not a confirmed entry strategy. So yeah, if you watch throughout the video, you can understand why I'm doing this. So let's move on to the lower time frame to see if the market was doing any bullish engulfing candle here. What was the expectation in the lower time frame? Because we are on the monthly right now, let's move on to the daily. We can see from here we have zones around this area over here, but the confirmation was a little bit late. We can see that we have our zone over here, which the market touched with this zone, with this candlestick here. But we can also see that if we draw our trend line from here to here, we know this is a bullish continuation pattern. We have a bullish candle over here, confirmation candle for the bullish side here, this one, even this one over here. And then our stop loss will be below. So you can predict Bitcoin very easily. It works like a charm using supply and demand zones. It works like a charm. As you can see here, we have our engulfing candle over here, confirmation candle over here. Without spiking this, we have another one over here, confirmation candle here. We have another one over here, confirmation candle here. There's a lot of them. We have another one over here, confirmation candle here. We have another one over here, confirmation candle here. So you see, you can trade very easily using this. We have another one over here, confirmation candle here, which is bigger. We have another one over here, confirmation candle here. I feel like I'm DJ Khaled right now. Another one, confirmation candle here. This is a lot. This is a lot of them. For the bearish side, another one, confirmation candle here. You see, if you train yourself to do something like this, you'll find them very easily. Another one here, confirmation candle here. Even in here, another one over here, confirmation candle over here. So you see, it's not that difficult to identify them. Another one over here, confirmation candle over here. Another one over here, which is the weak type, confirmation candle over here. Another one over here, confirmation candle over here, because the market touched the zone, confirmed after making this bearish candle, closed bullish. I hope you have enjoyed this video so far. Keep practicing, keep learning. You will improve with time. From this section, I'm going to show you how to cheat using supply and demand zones from the higher time frame to the lower time frame. So in this section, I'm going to make everything simple for you guys. So every time when you see an engulfing candle like this one over here, we already know that this is our zone over here. So by doing this, we can say we will like to sell from here after every time when you see an engulfing candle. But in this case, we can see that we didn't have any retracement to that previous candle's body. So we will avoid this one over here. And then we will try this one here. Every time when we see an engulfing candle on the daily, we will try to buy from here, because this is our demand zone that is forming but without a confirmation. So when you see an engulfing candle, the market likes to retrace back and touch that previous candle's body and then move higher without confirming it. So in this case, we can confirm it in the 1 hour. The rule to this is that you have to find a zone below this area over here. But as you can see here, there's no zone that has formed inside this area here. So in this case, we will avoid such behavior, because even if we use this one over here, it was invalidated by this wick over here. Okay, I'll show you a proper example so that we can see it clearly. From this example over here, we can see that we have our engulfing candle, and then we put our horizontal line over here. Then we will, because we are on the 4 hour time frame, we'll move on to the 50 minutes to find an entry here. From this area over here, when the market is pushing lower, what we have to do is find a zone inside this area over here. Let's find the first one. We don't have any. And then we have this one over here, which was also invalidated too by this candle. So that's what we need. We need a zone inside a zone of the higher time frame. So in this case, it was invalidated. So we will avoid such, but eventually the market pushed higher from here. Yes, from here we can see that the market is bearish. But let's look at this engulfing candle over here. As you can see, we have an engulfing candle over here. So we will look to sell in the lower time frame. Because we are on the daily, the lower time frame is 1 hour. So meaning we will look to sell here. So in this case, we can sell by this confirmation over here. So that means we can sell from above like this, and then you make a huge target because we are trading the daily. So in this case, as you can see, we can have a smaller stop loss. As you can see, the market eventually pushed lower like this. As you can see from here, we have our engulfing candle over here, followed by our zone over here. So in lower time frame, we will look to buy from here. As you can see, we have to find a zone inside this zone. We will start from this side. We can see that we have our filled zone from here to here, and we also have this change in market structure over here. So you see the market pulled back to this and then eventually pushed higher from here. So meaning we can enter from here using this zone. This zone will determine our stop loss, meaning our stop loss is here. So we can buy from here. As you can see, the market never pushed below this. So in this case, we can see that we're entering the market with a 10 pips stop loss, targeting a lot of pips. As you can see from our entry, that is 1 to 14. So as you can see, this is very simple. I might say it's simple, but with a lot of practice, this can be a lot more simpler. Here we can see that we can use a couple of more things using supply and demand zones. From this example over here, we can see that we have our support over here, followed by our demand zone over here, our confirmation candle, this one over here. This is a bullish engulfing candle, which means we can enter the close or at the retracement. So let's move on to 1 hour to see if we can reduce the risk. From the 1 hour, we can see that what we need to find is a change in market direction. It's like this. We can see that the market broke through this high over here, meaning we have to enter throughout this line over here. This is where the retracement line starts. So this is where we look to enter. Let's find our zone in the left side of the market. As you can see, we have this one over here, which was invalidated because we will start to look to buy at the retracement line here. So which means this one here, the wick invalidated this line here. So we'll find another one on the left side of the market, which is this one over here. From the wick to the body, we can see that price section went inside this zone here. Let me remove a couple of more things to make this chart a little bit clearer. As you can see, we have this engulfing candle over here. Why am I using this one? Is because the market was bearish, made this zone bearish, but the market broke through it. It didn't come here and make something like this. So which means this zone will be tested in future. So we can see that we will enter from here. So our confirmation candle will be something like this, putting our stop loss here. As you can see, we can target more pips, risking only small percentage of our accounts. As you can see, even the market pushed even higher. It never stopped. So that's how you trade, using a couple of more technical analysis in the market and using only engulfing candle as a retracement strategy. So let's find another example in this market. From this example over here, we can also use trend lines. We have our bullish trend line, which was broken. This is a reversal pattern. As you can see from over here, we have our first touch, second touch, even our third touch. Below we can see that we have our touch over here, our touch over here. So to sell from this, we can see that the market broke through, consolidated a little bit, made a zone from here. So meaning you can wait from this side, and then you will look to sell from here. Because we are on the weekly, we can't confirm our entry here. We can confirm it above, because this is not an engulfing candle. Or confirmation is when the candle closed bearish inside the zone, and then we will wait for a retracement above this candle over here. So in lower time frame, we'll look to sell here. Because we are on the weekly, as you can see the weekly over here, we are going to the 4 hours time frame to sell from here. And for targets, we can target a lot of things. Support and resistance is here. As you can see, we have a strong support and resistance over this area over here. Or we can target previous highs and lows, which is this one. So we'll go to a lower time frame to target the first support and resistance over here. We know that our target is this area over here. We will look to sell at this top over here. Let's see if we can reduce our risk using this. Right now we will look to sell here. This is where we look to sell because this is our retracement area. Firstly, let's find a change in market structure. We can see that we were bullish, then bearish again, something like this, and then meaning right now we can look to sell. We have our zone over here, then we can sell from here. Our stop loss above the zone, because this is where we are looking to sell. We have our confirmation on the weekly. We are looking to sell from here, and then we're targeting this area over here. Previous highs and lows, or support and resistance level. This is where the market likes to go. As you can see, this is 1:11, risking only small pips. I hope you understand this section over here. Let's try out another example on a different market chart. In this example over here, I'm going to show you, if let's say right now we have a zone like this here. This is our daily zone over here, and then we will have our daily confirmation, which is this bearish candle. So we will look to sell in the lower time frame from this area over here. So meaning this is our higher time frame analysis with a confirmation. So we have confirmed that the market will push lower to the downside. So let's move on to 1 hour to see if we can find a sell setup on this area. Because we are on the daily, we know that the lower time frame of the daily is 1 hour. As we can see from here, let me zoom in a little bit. From this area over here, we will look to sell from here because this is where the retracement line is. So if we were trying to trade in the higher time frame, our stop loss will be above this. So meaning right now we have to find a zone on this area here. So our zone is this one over here. This is our zone over here. So we will sell through this, put our stop loss above, confirm our entry like this. So meaning right now our stop loss has been reduced from this to this, plus the entry from around this area to here. So meaning right now we are risking low to trade to the downside. As you can see, the market eventually just tanked lower. So our trade setup could have been like this. Stop loss here, targeting maybe the previous low, which is this one here. This is 1:163. So meaning you are risking $100 to make a lot of money on this trade. As you can see, our stop loss is low, but our target is very high. Because some of the trade setups don't have those kind of things. Like for instance, we can see that we are in a bullish market like this. We have our first touch over here, our second touch over here, and then our third touch over here, which made an engulfing candle over here. We can try to buy in the lower time frame using an engulfing candle alone. But when you reach a lower time frame, you have to know that we will look to buy at this area over here. So we need to find a zone in this area below the area here. So we can see that we have our zone over here. So that means we can buy from this candle close over here, this one over here. Or if you were late to the market, you can enter, but it's a little bit late. Anything can happen. As you can see, we can buy through this candle over here and then putting our stop loss below our zone over here, pushing through this bullish trend. We can use a couple of more things just to make our sell setup, our buy setup more valid. So I'm going to show you this one that I sent in the Telegram group on how I did this sell setup over here. And I predicted that the market might come to this area over here. I will show you properly on why this trend went through the direction of my expectation. I saw this engulfing candle over here. As you can see, there's a lot of space in between here. There's a small little space like this. So I just expected the market to come and retest this line over here and then go lower. So in this case, I just went to the 1 hour time frame. Went to the 1 hour time frame. Made a trend line like this because this is our bullish trend that was broken. Made another trend line here because this thing here is just a correction. But let's look closely from where I want to sell. We have our zone over here. This is an engulfing candle, the previous candle. So you can see that sometimes the market doesn't touch the body. I was looking to sell from here, but the market didn't come to this area here, but it confirmed with the wick, not the body this time. So as I said, you might miss trades because of those kind of things. As you can see from here, the market pushed lower. This is your sell. You can see that your stop loss very low, very low, 29 pips, targeting 50 pips. As you can see, 1:4 is from here. Your target is hit, and then the rest you can add maybe the previous lows, which is this area here. But your target 1 has been reached. So if you missed that first entry over there, you can try to enter here, but eventually the market just spiked through this area over here. So there's no confirmation, which this is invalidated. Before the market come to your zone, let me show you something very quickly. This is your zone over here. Let the market do something like this. A wave like this confirms the market. Let the market breaks this low, this high here, and then enter on this second one. Because if you just enter on the first one, if the market is just consolidating, it will keep consolidating while your stop loss is intact. You'll see negative. So if your psychology is not strong, that means you will get out early without seeing your profits, because some people just get scared of seeing negative in their trade. You can also see that here, even here, if you enter this one will be stop loss hit immediately, same as this one over here. If you confirm to your trade, but here there's no confirmation. As you can see, there's no confirmation. This is not a confirmation candle because the price action spiked through this zone over here. So that's how it goes. Every time when you see an engulfing candle on the market, just get excited. Like for instance, this one over here, just know that after every engulfing candle, the market likes to retrace. If you are on the higher time frame, this will confirm our analysis, but this is not a confirmation entry. So let's move on to the 1 hour to see if we can be able to try to get into the market after this engulfing candle over here. As you can see, we are looking to sell from these areas over here. So which one is our zone over here? Is this one. So to confirm our entry, we confirm, because this one is an engulfing candle over here, we can enter at the close. We can enter at the retracement or at the close. So meaning we can enter the market something like that. As you can see, the market tanked lower, risking only small pips, because here supply and demand will give you a confirmation to enter the market. You just don't enter the market without any confirmation. As you can see, 1:4 is around here at this area. You take your profit and then leave the market, or you can target the gaps that I was telling you about. Do we have them? We have them here. This one here is already closed. We have another one here. So you can see you can target a lot of things over here throughout the week. So this is how you can trade easily throughout the market. For instance, let's say right now we have this one over here. This is our zone over here. Confirmation candle over here. We don't want to sell in this high time frame, but we know that the market might potentially reverse. So we will put our retracement candle here. This is where we look to sell in lower time frame. Let's move on to the lower time frame to see if we can get into the market. We know that we have to sell from this area above here. We will look for zones, for zones, for zones. There's nothing, literally nothing over here. But after waiting for a couple of more hours, we can see that the market eventually made one, which have 1 and 2 confirmations. So you see, sell from there, going lower. So as you can see, you can even make your targets even higher every time. This is how you can cheat to identify your supply and demand zones in lower time frame to get a valid entry by engulfing candle or confirming with the zones in the higher time frame. So that's how it is. If